Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Well, it has been a game of waiting. It's been almost 13 days since we took an exit. And that 13 days represents about a 10% move in the market that we were on the sidelines. It's almost like sitting around watching this jellyfish. The first couple of days, it's interesting. But after that, it's just boring. We have been sitting on the sidelines. Market moved from about 78 to about 86. That represents something in the neighborhood of a 10% gain in the buy and hold strategy, and we were just not participating. But the good news is, at this level, Adam finally decided that maybe it was time to get back in. So we're going to go ahead and make an entry here. You can watch that happen live, and our order is going to go in and it will be filled. Well, the next day, good things happen. The market gapped up to this level here and continued to run for a little bit. And this is an interesting spot to be in. As you may remember, we were out of the market for a long period of time. The market's tending to get closer to its all-time highs. This is a pretty good day. What's the right answer here? Do we continue to ride this trend, or do we go ahead and take the exit? We have a nice little one-day profit. So here's what Adam decided to do. We're going to take the exit. We're going to take the win. We're trailing the S&P by quite a bit in terms of buy and hold strategy. So we're going to go ahead and take this win. You can watch that order going live. And trade 23 is over. Let's head over to our tracking sheet and see how we're doing. Well, that trade 23 completed on August 30th. The S&P 500 was at 563.68. Since our last move, it had changed about 6%, bringing its year-to-date total up to 18.59%. That is an amazing return on buy and hold strategy. I think typically people would say that on average, compounding growth rate of the S&P 500 might be around anywhere from 7 to 9%, maybe 10 depending on how you're measuring it. But this year, looking at 18, that's pretty phenomenal. Again, these green bars identify the highest point of return so far. So as of August 30th, this is the highest return so far for the S&P 500. We ended up getting a little bit of a gain. We had a one-day gain of just under 2%. That's a pretty good one-day gain, but we were out of the market so long that we missed out quite a bit. So what does that mean for us? It means our year-to-date is at 9.72. That's a fair return, but we are certainly lagging behind our benchmark, which is the buy and hold strategy, sitting at 18.59 versus 9.72 for our trading strategy. I've said from the beginning, I'm just going to show you these trades as they happen. Sometimes we're ahead, sometimes we're behind. We are definitely losing ground on our buy and hold strategy. So, it's interesting to me to look at our metrics over here. We're trying to have about a 70% return rate on wins versus losses. And we're tracking exactly at 70%. So that part's pretty good. Our custom factor, the beat the market factor, this shows us how are our returns compared to the S&P 500 buy and hold strategy. One would indicate that we're matching it. Below one would mean we're trailing it. Greater than one would be we're ahead of it. We want to see that somewhere around 1.5. We are nowhere near that right now. So, we're just barely at half the S&P 500. You can do the math, but you'll see that, we're significantly trailing. Through this year, it's been a tough trading year. We've been ahead as much as a factor of, by 10. but we're also been slowly dwindling away, mostly by not participating in the market. So that's something we're going to have to look at. Ann and I are going to have a little sit down and talk more about why are we so hesitant to get in. But for whatever reason, he's got his hesitations. But that's where we are. You can see some historical beat the market factors. 1.3, 2.95, 1.58, those are all really solid. This year, not so great, not sure why, but that's the way it is. And it looks like there's a little error here that should be 70%. But our year over year, 4-year view of this has been good. This year, not so good. And we're going to have to see how the year ends up. Because I've said if you can't consistently beat the market, you should not try. You shouldn't try. We've got to have better results, and a 0.52 beat the market factor is not going to do it. So we'll have to see on our next couple of trades whether we gain a little bit or whether we continue to lose ground. But we'd like to see this close in. Anything above 1 by the end of the year will be okay. The higher, the better. If we're below 1, I'm not sure what we're going to do in terms of continue to trade or not. But we do have a bit of a history here, and we'll have to see. So you'll have to see what happens on our next trade. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.